Hey guys, welcome to this video. Thanks for joining me. Now in this video, I'll be talking about Zoom Video Communications Inc. Now, if you are familiar with Zoom, you know that this is a company that has recently taken off and they're performing really well. Now, the question is it too late to invest in Zoom, or should you wait for a pullback, or should you just go in and invest in it while it's still on the rise? Well, we all cannot really say. We don't know what the future holds, but we know that the current environment is really favoring the company, and the company is delivering on that as well. Now, you need to know that Zoom has existed since 2011, and it's almost a decade now that they've been in this game. So they really have a track record, and I will like to share those information with you. So if you find some value in this video, please give it a thumbs up. And also, if you want to get more videos like this, please subscribe to the channel. It definitely helps the channel to grow, and it keeps me motivated to make videos like this. So let's get to it. Now, before we get into the details of looking at the statement, the balance sheet, and income statement, and the cash flow statement, now all of this will be looked at in this video. But before we get into all of that, how does Zoom make money? That is exactly what we're going to talk about first, and then we'll go into more details. Now, this section is very important because if we understand how the company makes money, we would be able to understand how the income statement works and the balance sheet also. So let's look at this really quickly. Now, the first thing you need to understand that they have a basic plan, which obviously is free, and it says you can host up to 100 participants, unlimited one-on-one, and all this stuff. But now they have the Pro, which saves you about $60, and it says here it's $14.99 per month per host, and it says you can purchase up to 9 hosts per account. And then you have the business, and then you have the enterprise. This is something that a lot of businesses, like the major big businesses, will be putting their money into. And this would be the section that really brings a lot of money for Zoom, because if you think about this, they have a lot of companies that are using Zoom nowadays. Now, we're going to talk about that next. Now, I'm going to address the kind of companies that are actually using Zoom, just so that you understand the caliber of companies that are investing in this company. The first one we're going to go to is the consumer goods and entertainment. Let's go to that section and see the kind of companies. The first thing that stands out, 21st Century Fox Studios, they are using Zoom. Groupon, Delta, Theory Studios. And then let's move on to technology section here. We have Uber, we have Zendesk, we have Medallia, we have Autodesk, Viva. Then you can see the healthcare is also using it. We have Morfit's Cancer Center. Here's my point here. The reason why I'm showing all this is just to show you the group of companies and institutions and schools that are using this technology to meet their own daily needs. And you know that because of the environment we're in right now, this is the future, because we don't know when this pandemic is going to end, and because of that, these institutions will continue to rely on a technology like this, which means some of them are subscribed to this technology for maybe a year, maybe 2 years or more. And like I said, we're going to see that in some information that I'll be sharing with you shortly. So as we look into Zoom deeper, let's look at their first quarter result for the fiscal year 2021, and this was dated June 2nd, 2020. The first quarter total revenue was $328.2 million. That was up about 169% year over year. And obviously you can see it says it here that the C word has driven their demand. Okay, then let's go up here. It says the total revenue, I already mentioned that. It says income from operations and operating margin, and you can see their operating margin using the GAAP format was 7.1% higher compared to their first quarter of 2020. And the non-GAAP reporting was about 16.6% higher. So the point is, they're making a lot of profit. That's good. Now, net income and income per share obviously was higher as well compared to their 2020 report. And as I go up here, the total cash equivalent, and marketable securities as of April 30, 2020 was $1.1 billion. Now, we are going to get into this even deeper as we compare the numbers with the previous reports that they've given. So as we look into Zoom closely now, we're looking at the stock with the ticker symbol ZM, and the closing price was about $239. And let's go into the fundamentals, because this is where I really want us to pay more attention into some of these details. We're going to pull up the balance sheet here. So as we look into Zoom more closely, the first thing I just pulled up is the balance sheet. Now, as we can see that under the asset section, looking at the cash and short-term investments, the number has steadily increased from 755 million, 811, 855, and 1.1 billion. That's the one I had reported in that report that was just released as of June 2nd. Okay, so that's the 1.1 billion there. But as you can see, the previous quarters, these numbers have steadily increased. And mind you, this was in January. This was released in January 31st, 2020. So the C word, which I'm not going to mention, had just started. It wasn't full blown in the United States at the time. But the point was Zoom was already gaining ground. And obviously, by this time, they already gained that ground, and it's reflected in those numbers. Let's look at the total assets here. Total assets is 1.1 billion, 1.1, almost 1.2, 1.2, and now 2 billion. So you can see that they have acquired a lot of cash at hand, and also in terms of their investments that they've made, those numbers have really gone up. Now, the other thing we need to look at is liabilities, all right? As you can see here, total liabilities here is 326, 416, 456, and 1.1 billion. That went up a lot, but where did it come from? Okay, and it says here, accrued expenses, all right, that has gone up as well. Now, one thing that you need to understand is that because this is a subscription service and sometimes people will pay ahead of time, this will also be considered debt because they haven't rendered the service yet. So, as you can see, customer advances, and that's exactly what I'm talking about. As you can see there, that's the numbers, okay? Those are the prepayments that people have made ahead, and those numbers are right there. But then the interesting thing is it says other current liabilities, the total, obviously that's the total from that, and the total debt. As you can see that they have zero debt. Now, remember, this is still considered a liability, but it's not debt from banks. I mean, that's the way I can understand this. I might be wrong. If I'm wrong, you can correct me. But the point is that they have zero debt because remember, if they have zero debt, that means they are not paying interest on all of this money that they are owing. And I want to believe that that is exactly what this is saying. But again, it says here other liabilities and total, but you can see that they don't have any long-term debt. They don't have any under the total debt. They have zero total debt as well. But they have liabilities, and these are liabilities like expenses that they need to pay to operate, and also the payments that has been made in advance by their customers. So obviously those numbers will be under liabilities, and as you can see, they've really piled up a lot of, I would say, cash. Now let's look at retained earnings. Okay, this is the amount of capital that is kept after they've paid all their taxes and paid all the dues that they are supposed to pay. And it says here was a loss, here was a loss. And then here, they managed to keep some money, pretty much, about $27 million. And total equity has steadily increased as well, and that's good. Now, the other thing I would like to look at is the income statement here. Let's see. Total revenue, all right, as you can see, this is in thousands, so that's about 328 million. And operating expenses, not too bad, 304. And income before taxes, income after taxes, these numbers are steadily going up to the 7 million. And then let's go to total net income. Here it says, as you can see, these numbers are steadily increasing. Now, we know why exactly these numbers are going up, and it's obviously, due to the fact that, a lot of people are subscribing to virtual communication systems, and obviously Zoom is the front leading company that is providing this service. Now, as you guys can tell, that this company has obviously performed really well in the recent times. But the question is this a company that you would want to invest in long term? While it is selling at about $239 right now, I cannot really answer that question for you. That is up to you to determine. But the point is that the environment that we are in is really supporting the numbers that Zoom is reporting. And that means that if these conditions remain for a while, that stock price might keep rising. So the other thing also is that personally, would I be investing in a company like this? Honestly, I really don't think so. Now, the reason why I'm saying that at this moment, now I might wake up tomorrow and change my mind, but the reason why I'm saying at this moment is because what happens if tomorrow there's a vaccine for this pandemic or for the virus. Okay, if there's a vaccine for it, what do you think is going to happen to the stock price? It's going to go down. Now, obviously, it's not going to go down right away. It's going to go down over time. But the point is that, I don't want to invest in something that I feel like at any time they can easily cut the supply. Pretty much, I don't want that, because once people can go back to their normal lives, virtual communications will really decrease, because people would really prefer to communicate in person than to do it virtually. Now, don't get me wrong, the world is really changing and technology like Zoom is really making that possible. But the point is, as an investor, do I want to invest in something that I feel like they can easily cut my supplies at any time? I don't think I would want to do that at this moment. Well, that's really all I wanted to share with you guys. Again, we'll see what happens over time. But we are in a very fluid environment right now that things can change. On one note though, a lot of analysts are really putting this as underperform or sell. They are rating it as not as good. This may be hold reports, but that's just what I saw and I just wanted to share with you. I hope that you found some value in this video and I hope to see you in my next video.